Welcome to another episode of the People's Real Estate Podcast. In this episode, we have a special guest. We have a good friend of ours, Alvin Flores. He is a lender with Embrace Home Loans. We brought him on to answer a lot of questions, talk about just chat, and answer a lot of questions that people may have concerning the loaning process. You know, what it's like behind the scenes of what a lender thinks when he undertakes a potential client. So without further ado, I am joined by my other host, Rene Guzman. And without further ado, Alvin, how you feeling, man?
Pretty good, man. Pretty good. Thank you guys for inviting me over.
Yes, man. We're long due. We're excited to have Alvin on the podcast. And Alvin, just for the people, just introduce yourself. Tell us a little bit about yourself, how you got into the business, you know, and what got you into the business.
Okay, cool. So my name is Alvin Flores. I work for Embrace Home Loans. So I've been in the business for about, I would say, a little over 6 years. I've done prior to real estate, I've always been in the field of helping people with their finances. So prior to real estate, I'll just give you a brief background. I was doing student financial aid for ITT Tech. You may have heard of it.
I remember them.
Commercial.
Yeah.
It was all over the TV.
Commercials
right in between Jerry Springer.
I remember it was with the gray bold letters.
For some reason, ITT.
It's like embossed in my mind.
Those blue letters.
Yeah.
So I did financial aid for students. You know, so I had that experience of meeting with them, one-on-one, filling out their FAFSA forms, telling them what they qualify for, if they're getting grants, student loans. So I come from a background of like assisting people, from different type of backgrounds to go to school. You know, okay. So that was my main job, and I did that for about 8 years with ITT. Then ITT had a downfall. They ended up closing down, which kind of put me in a position of where I really wanted to move in my career. And at that time, I ended up, I had a real estate friend who had assisted my mother-in-law actually to buy her first home. And so, in trying to transition to a new field, I wanted to do something very similar to what I was doing already at the time. So I did look into going into other for-profit colleges to do the same thing. But that real estate friend, he ended up, saying, hey, go and meet with one of my lender partners who can probably, kind of tell you how that field kind of translates or transitions into what you're doing now. So I'm like, all right, cool. Let me go take a look at it. So that's kind of how I introed into real estate, or at least on the mortgage side. So since then I've been with in real estate or mortgages doing that for 6 years. So I felt like it was a super easy transition because I got to meet with people one-on-one, explain to them how to fill out the application for mortgages, and explain to them how much they qualify for, what programs they have available, which was easy transition. It was pretty nice to me. So I felt like it was even more rewarding simply because you kind of guide them through the entire process of the start of the application all the way to the very end of the finish line of settlement, which is pretty cool and rewarding to me.
Yeah, no, that's awesome. So how, in your experience, it was more of an easy transition because you already had experience working with people, and then making the transition from that to being a lender is like you're still working with people. You just had to learn, the lending side, but you still had that background.
But it's awesome that he says that, right? Because he already had a background of in finance, kind of trying to find people money. You see what I'm saying? And how they kind of like bridge the gap and stuff like that. And that's an excellent way to look at lending, especially if you're going to be helping in the Hispanic community. Because we need a little help here and there. And when a lender has that mindset, that's awesome. I know that's good chemistry.
I know in my experience in my household, and I know a lot of Latinos can relate to this. It's like when you needed something to be filled out, when my parents needed something to fill out an application or something. Hey, te necesito. I need you right here. I need you to help me fill this
You'd be
out.
surprised. 9 years old, 10 years old, you're translating.
Bro. I was paying
legal forms.
That's your first job.
And what was my parents' favorite thing to say to me when I didn't know how to translate something? ¿Y pa' qué te mando a la escuela? Why do I send you to school?
The worst part is when you have to translate something, you don't know the translation, so you say it again in English.
Yeah. I used to do that all the time.
So it's like,
I used to do that all the time.
Spanish accent.
I hear you.
Yes.
Hey, I have a question though.
Yeah.
So usually you said real estate friend, right? That was a realtor?
It was a realtor.
So that's why I'm curious, because realtors don't usually go, hey, be a lender. You know what I mean? They want to recruit you to be a realtor. You know what I mean?
Absolutely. So I think he was a good enough friend to my mother-in-law that I think his intentions were good. And he maybe himself, I guess, thought of it as, hey, I don't want no other competition. You know, any referrals that she gets.
Right? I was just gonna say that.
Any referrals that she gets, she's not gonna send it to her son-in-law, right? So maybe it was the competition factor. I don't know, but you know, he had a good intention, and he got me set up right away with.
Hey, worked out for us.
Yeah, right.
It did.
So it was, but yeah, you're right. I think you know, mortgage and student financial aid are two completely different animals, right? Yeah. But I think like what you were saying, kind of going off of that point, you know, I did have that experience of dealing with people one-on-one and helping them source out student financial aid, scholarships, and that customer service mindset is always what I carried, you know. So I think that really helped me become a good lender. You know, in my own opinion, I'm a good lender, but I would say I vouch for that. Yeah,
I do too.
So I feel like that's really what helped me, you know, trying to transcend into that realm of real estate. You know, so
and then also, like, you know, in this space and in this business, you know, hearing it, you know, I'm compared to you two, I'm relatively new to it, and one of the things that I heard the most coming into this space, this business, was that, you know, you got to make sure that you work with a good lender. You got to make sure that, you know, because a good lender, you know, he can make the transaction, the whole process much easier, much smoother. Yeah. And then and vice versa, a bad lender can break a deal. Yep. You know, he can.
Do you know the story how we met?
I think you've told me, but say it again. Let's do it.
Story time.
Refresh my memory. Yeah.
So this is Trump, I think, just had taken office, and there was politics against DACA, right? And so the lenders started getting, you know, I guess nervous or, you know, cautious or whatever it was at the time, and, you know, not really accepting DACA applications because the way on the legal side how it was looking, we didn't know if you know, if that was going to be valid in a year or two, right? So I had a young couple. And I had them with another lender, right? And how we really met was, you know, the lender came over to the office, to our brokerage, and bought everybody lunch, right?
That's right. Yep.
And just started talking about their services, and that's usually how it works. So it was like a networking thing. I met Alvin. I was like, okay, you know, young guy like me, you know, Hispanic. Okay, good. Like, you know, let me get his card. But I was working with another lender at the time. Long story short, that lender said, "Hey, we don't want to work with," and we were like 2 weeks away from closing or something like that.
Oh,
right.
Yeah, I don't remember that. That's crazy.
Yeah. We, on our side, we were like 2 weeks away from closing, and they were like, "Hey, we can't do this anymore because you know what's going on with Trump, and we don't really know if DACA is going to be a legit thing anymore." So these people were DACA, right? And it sucked because they were a young couple that had a baby on the way, right? Yeah. So I reached out to Alvin and I said, "Alvin, look, man, I got a lender telling me that they're not doing DACA loans anymore, or you know, not DACA loans, but people can't use DACA to get the loans anymore, right?" And he's like, "Well, let me check," right? And he checked up. He said, "Look, we're going strong, bro. Like, you know, there's no problem over here if you want to bring it over here." And you know, it's tough for a realtor to take your business to another, like a new lender that you don't really know how they're going to treat the clients, things like that, right? Yeah. But in this case, it's like I had to, you know what I mean? So switched them more to Alvin. Alvin got it done in 2 weeks. They were happy. It was seamless, bro. You know what I mean? And from then on, I've been rocking with Alvin, bro. I mean, you can get it done. When the other people can't get it done, that's where I want to be. You know what I mean?
Yeah. That's awesome.
Yeah, no, and it's good, man. Honestly, you know, not only do I vouch for myself, obviously, for doing certain things or a certain process to make sure that the client is taken care of and explained everything thoroughly. Everything's transparent to the client. So obviously a 2-week close for them on their side, I can only imagine me being put on that situation that we're changing up everything, maybe a new rate, new program, whatever. Thankfully, everything worked out to where, the client got the most beneficial program and everything. But it's, from the client's perspective, that must be a stressful situation. It's like, oh my God, what are we going to do? Am I even going to get this house? We're 2 weeks away from closing. What am I going to lose my deposit? All these things running through their head, right? So that it takes a good team, on the realtor and the lender side to make sure that the client is feeling comfortable with the situation, especially because now, like he said, on the political side, they're being told that, hey, we may not be able to assist you with getting a house anymore. Now their American dream is slowly diminishing. And then thankfully, there's still people that are out there that can do it. And thankfully I had that ability.
And speaking of that, while we're on that topic, is it possible, because some people out there don't know, is it possible for somebody who has DACA, that has that's a dreamer, are they able to buy a home?
Yeah, absolutely. So as of now, there's still that opportunity for buyers to not only get programs to buy a house, they could still use those programs to still get financial assistance, down payment assistance, or closing cost assistance.
Okay.
So they have all the same opportunities that anybody else may have who is a first-time home buyer. So they have no limitations as of now.
Yeah, well, there you go, people. If you are a dreamer, if you are wanting to or have had that question, that doubt whether you are able to buy a house, being a dreamer, there you go. You can. And let me put you in contact with Alvin, see if you can qualify for programs to help you with your down payment. A lot of people don't know that. You know.
That's what we're here for, man.
Yeah, and that would be a perfect to lead us into our next thing. As we know, right, when it comes to real estate, a lot of people always have doubts. I know when we're initially talking to prospect clients, their biggest concern is or their biggest, the biggest hurdle to that we have to cross is getting them to a lender.
Yeah.
Right. Because then I feel like, people are always afraid of commitment, right? Because they feel like when they get to the point of speaking to a lender, they feel like, real. It becomes real. Like, they get hit with the. So, what are some? I have a couple questions here for you, right? Just to break down those worries, those hurdles for people at home, and just to answer some of the questions that people may have, right? Yeah. So, when they.
And to add to that, Carlos, I think the hurdle is because people have this idea that you have to be perfect. You see what I'm saying?
Yeah.
So, if I'm not perfect,
that's good.
I can't go talk to this guy because I feel some kind of way. I'm going to be judged or whatever it is.
Exactly. Or it's a big insecurity for some people. Their finances.
Yeah.
Not everybody knows about their finances. Now you got to tell a stranger.
A lender's lifting up the hood and looking at under. And that a lot of people don't like that.
Exactly.
Well, nobody. I don't. I don't want you looking at my personal stuff. But in order to buy a house, we have to go through this. That's just part of the process. They have to look at your finances, right? And here's the thing, a lot of people, I get a lot of people on the phone that say, hey, Rene, I know you're probably going to hang up on me or you're not going to want to talk to me because I have bad credit. You know what I mean? I'm like, nah, why? I understand why you're saying that. Most people, as soon as you tell them, hey, I want to buy a house, I have bad credit, they're probably going to discard you. You know what I mean? I always told, Alvin and I, we work off the same philosophy. It's like, hey, this client is going to be a client. Right? Whether it's a year from now, 2 years, 3, we're going to be in the business. You know what I mean? So that's how we look at it, right? So I tell people, okay, so we already know that you can't buy a house because of credit. That's fine. You know what I mean? Let's find out what else you got going on. You know what I mean? Right, like the whole thing is, don't look at that as like, oh, if I don't have good credit, I can't buy a house. Yes, You might not be able to buy it right now.
Yeah.
But it's a process, right? Not an event, like we always say.
Yeah.
So the idea with getting a lender is, and Alvin will go this the extra step. There's some lenders, look, it all depends on what level of service you get out here, right? And you're gonna feel it when someone they're not really caring. Oh, they're not really caring about your situation. And what a lot of people tell me is, hey, at first they were all friendly and stuff, and then once they saw my situation, that I didn't get the calls anymore. You know what I mean? And look, we're a commission based business, right? So we understand that. But like I said, it depends who you're dealing with and what their philosophy is in business, right? Like us we're here to help people in the long run, man. Like not just right now, right? So that's the idea. Alvin, there's some loan officers that won't even send you the credit report, or they won't even call you back, like I was talking about, right? So what we do is we try to, even if we know, hey, this person can't buy, right? But we sit down with them, we explain to them, okay, this is what you can't buy at the moment, right? Whether it's a credit, income, whatever it is, and we say, hey, this is the action plan, right? In the next 3 months, in the next 6 months, in the next year, this is what you need to do, right? And I pride myself in that, because it's like you set people in the right direction, you know what I mean? Instead of just saying, nah, you got bad credit, you know what I mean? So I just wanted to add to that. So I feel that's one of the main reasons people think that they need to be perfect, you know what I mean? And it's like, no, we understand. We don't even know if you can or can't buy a house, so don't feel pressure that we're going to make you buy a house. We don't even know. That's what we're trying to find out. And if you can't, then we want to guide you, right?
Sticking with the car reference, right? When you take you're not gonna just let anybody go look underneath your hood, right? Underneath your car, and that's why you go to a mechanic. A mechanic is a certified, a professional, right? They know what they're doing, they know what they're looking at, and they'll be able to give you a good idea of what's going on with your vehicle. A lender is similar. He's going to look at all your finances. He's going to look at your income. He's going to look at your credit and give you an idea of how good of a shape you are to be able to qualify for a mortgage. Correct. And and if you're not, here's the thing: it's still a plus. It's still a good thing, because then we'll be able to put you on the right path for you to be able to be good in a good shape to qualify for a mortgage, whether that's 6 months, 12 months, a year from now.
Exactly.
But but if the thing is, right, people, if you're a serious buyer, you're planning on buying, whether that's now or later, you're gonna come across this either way.
Yeah, you got to go through the
I feel like the sooner the better, right? Get it out the way. At least right? You'll have peace of mind. Okay, and then that's up to you whether you want to put, take action to get those things resolved now or later. But at least you'll know, right?
Yes.
Instead of, many times we've come to people call us and like, hey, I'm ready to buy a house. I got the down payment. I'm good. And then, okay, let's get you to a lender. And then we get them to a lender and it's like, hey, nah, they got to fix this, and this. And that's going to put them back 12 months, 6 months,
Yeah, con nosotros, típicamente, it's like, it's going to be, I'll be honest, man, but, this is the People's Podcast, right? Le sacaron carro a alguien, you know what I mean? Or le prestaron la tarjeta, or whatever it is, right? And then, oh, that's right. Like, Alvin will pull it up. Hey, in 2016, you owe T-Mobile $338 here. Ah, sí es cierto, es que el primo Néstor or whatever, right? So we gotta, that's what we gotta look up for.
No,
you know
you're
what
right.
I mean?
You're right. And that's a huge thing, especially within the Latino community. There's a lot of people that co-sign because they're family.
Try to help each other out, man.
Helping each other out. And that's a big thing. But there's ways around that. That's the great thing. There's ways around that. And those are situational things that we'll talk one-on-one with them. But there's ways around if you have co-signed for someone. There's ways that you can not necessarily include that debt and make sure that you're able to kind of justify and document that other person is paying for it.
Well, let's give him a hack, Alvin. Give him a hack. Let's say, show him something, Alvin. Let's say, let's say my girlfriend and I, or my wife and I, we co-sign in a car. But honestly, like she's the one that pays for it.
Okay.
You know what I mean? But I'm on there though. Yeah. I'm responsible for it. So how would you get around that?
So let's say the situation would be that, and you're the one buying, right? You and the girlfriend are buying, and
or maybe I just want to buy a spot.
Okay, yeah, exactly. All right, so you're the one buying, and your girlfriend has the car payment, but you also co-sign.
Yeah, it pops up on my credit report.
So the idea or the way that you can get around it, so that way it's not affecting your way of buying, is by documenting that she's the one making the payment. So you'll typically just have to provide the lender a copy of the note or the car
note?
payment, car payment, the statement, and a 12-month history that she's the one making the payment, right? So as long as you're able to justify and document that, that won't affect you. You don't have to get hit on your debt to income ratio to be able to buy a house. So now you're able, your monthly gross income has more capacity. You have more ability to buy something, and not have to include the car obligation.
Okay, that's good to know.
Doesn't go against me. There you go.
So I have a question, right? So when lenders, what do lenders consider when deciding if someone is qualifies for a mortgage? What type of things do you guys look at?
Yeah,
right?
so I like to because this part of the process is so complex for some that they think that, oh my God, I don't know what they're gonna look for and how they're gonna view my information. I always try, especially when it's a person that I might have to talk to over the phone, I always try to dumb it down and just kind of simplify the entire process for them before we even meet. So that way they're going in with a mentality of this is informational. We're just meeting to kind of discuss certain things. So what my basic concept to everything, at least when we first talk, is that I tell them we're going in and doing a mortgage application, right? So this mortgage application, well, I'll tell them we're looking at 3 major components to it. We're looking at your credit history and score. We're looking at income. And as far as the income, it would be the documentation of taxes, W-2s, and pay stubs. And then the very last thing would be your assets, liquid assets, your bank statements, 401k, CDs, whatever it may be that you have. So I kind of break it down into those things. So that way they kind of have an idea of what I'm going to be looking for. And at the end of the conversation, if it's a phone call, I'll try to set up, I try to go off of what they feel comfortable with. If they feel that they'd rather meet in person, then we'll do what we can to meet in person. We'll either meet at their house or at my office. If they feel comfortable with just sending me everything electronically, then by all means, go ahead, send it to my email, right? So we try to give them options so that way they're I guess their experience to getting a mortgage or a pre-approval is as simple as possible, because that's essentially, it's one of the hardest things to get done. I feel like I try to simplify it so much that when it comes to, after it gets pre-approved or it gets approved, the hard part is looking for a house, because everything else has been made simple on the mortgage side.
Yeah.
I got them approved, and they know that they're good with the lender. There's no questions. There's nothing other than looking for a house. So that's kind of where their mentality is like, I got to find my perfect house now.
Correct.
So if they don't close, it's the realtor's fault.
That's right.
You heard that, right? You picked up on that, right?
There's a shortage on supply right now.
Yeah.
Right.
There's a shortage, so it's gonna take a little bit.
Yeah, no, but I try to do that like a commitment-free type of thing, because like I said, it's a stressful situation.
Yeah.
It's high anxiety. They're over there thinking that, oh my God, I don't know, am I going to qualify?
Yeah.
What is he going to think about my credit?
They're like, I'm getting into this huge debt.
Yeah,
How am I
Bro,
gonna pay
and that's
for
one
it?
person.
Yeah, exactly.
Sometimes you do with couples,
Yeah.
3 people, like, man.
Yeah, and that's one thing. Some lenders I've heard that they have multiple people going through your stuff, right? And sometimes these clients may even deal with all these multiple people, calling them, asking them questions about their information. I don't like that. I hate that concept, because now the client feels uncomfortable having to re-explain themselves.
Like, who am I really dealing with?
Who are you really dealing with?
Yeah.
Exactly. So I take initiative in doing everything for the client, as far as me being the point of contact. If they have questions, they'll come to me, they'll call me, text me, whatever, because it's more of a comfort level for them.
Yeah.
And we've already established
And
that trust and rapport,
it feels personable.
Exactly.
It feels like, like, hey, I know who my lender is.
Exactly. And it's fine if it works for others, no problem,
Yeah.
and if other people are okay with that process, no worries.
Yeah.
But I feel that for me, that's where a lot of my success has come from, from being able to provide that personal touch. And they'll go on and say, hey, Alvin and Rene, or Alvin and Carlos provided the great service. I was able to contact them at any hour of the day with a question or whatever it was.
Correct.
They answered me right away, or they responded through text, whatever it was.
Yeah.
And it will lead to maybe a referral, you know, and they'll say, hey, you know, these guys helped me out. I enjoyed the experience with them, you know, and that's where the rewarding part it is for me too, you know, because I'm like, I feel good about being able to provide that high level of service that they expected, and I know I'm able to give, you know.
Yeah, because that's kind of what sticks with people, right? It's when when you've already accomplished what you guys have been trying to do, buy the house, and then it comes time where we ask for feedback, and you know they're honest about it, and they tell us, hey, one of the things that really stuck out to me was when I called you that time at 11 p.m. and you picked up.
Yep.
You know, because you know I had this question, and you know you took the time, you know, despite the hour, the time that it was in the night, and you picked up and you answered my question.
That's
you know,
right.
those are the things that, you know, to us wouldn't really be like a huge thing, you know, but to clients, they those are the things that stand out and that make us different from any other agent or lender.
For the most part, most lenders are going to offer very similar stuff. You know, at the end of the day, you're really buying into the loan officer himself.
Correct.
Yeah, service. Yeah.
Yeah, it's the service.
Yeah, it's a service because we all do the same thing. Every real estate agent is going to walk you through the same process. Right. It's just how they walk you through the process and how convenient, how easy, how smooth they make the process.
Yeah,
exactly.
Let me share my experience with you guys. When I first started, I linked up with a lender. You know, kind of referred by someone else, and you know, when you first start out, you kind of like, you just kind of staggering around trying to find the right people, right? So I'm with this lender, and this lender never, let's say we closed about 20 deals, 25 deals together. Never, not one did he close on time.
Ouch.
You see what I'm saying? Not one, bro. Not one. Now he was batting 1,000. He was closing all of them, but you know,
there was always.
So I'm new, right? I'm just thinking. I'm thinking, hey, as long as he's getting the job done, you know what I mean. Then, about a year after that, I start getting these weird referrals where it's like, hey, Rene, my aunt wants to, you know, my aunt wants to buy a house. I want her to work with you, but she wants to talk to you first. Okay, cool. So I would talk to them. Listen, I would talk to them. They'd be like, hey, hola, Rene, ¿cómo está? Or whatever. Hey, look, Rene, you helped out my niece. You did a great job, but they weren't happy with the lender. So, you know, I want to work with you, but I don't want to work with your lender or whoever you're going to recommend as a lender. Bro, you know, that's like, it's a weird feeling. It's like a
weird position you're put in.
Sweet and sour, you know what I mean? It's like, okay, I did good, but the people I have around me suck. Like, you know what I mean? Yeah. And then I was thinking, these are the people that were actually brave enough to say, hey, you know what? Even though he works with shitty people, you know what I mean? I'm still going to give him a shot. Yeah. Imagine how many people didn't give me a shot.
That's true.
You're right.
That's very true.
Hey, because you're guilty by association. That's just how life is. Yeah. You know what I mean? So to me, that was super important, man. Like eventually linking up with lenders like Alvin, that man, respectful, good service, and understand that, you know, listen to his philosophy. Hey, look, everybody can do what I do, right? Yeah. So I just got to do it better. Yeah. You know what I mean? So that's how, you know, that's why we click because of that philosophy. You know, that customer service to the client. You know?
No, that was good.
So yeah, so you can be batting 1,000 in that industry, man, but doesn't mean you're good at it, I guess. You know what I mean?
Yeah. It's I would say it's a reputation that you hold in the business, right? Yeah. You know, and that's exactly to his point, you know, so he holds a good reputation. That's why they reached out to him. But they know automatically that the guy that he was working with wasn't as good, you know, and that's the reputation that I want to be held to. You know, I want to have that, you know, somebody come back and say, Alvin provided great service and I liked working with him. Yeah. You know, and like I said, I mean, for the most part, the realtor is always the one to kind of save you in the end because they're with you from the very start to end. But the lender's always the bad guy. You know, and in most of the situations, lender's always the bad guy. Oh, lender's asking for this, or you know, you know, they're telling me that I need to do this now, or I need to provide some extra documentation, whatever it is. The lender's always the bad guy, and you know, so at the end of the day, I don't want to be viewed as that. I want to have a good reputation as a lender.
And your work speaks for it. So that's all that matters. Moving on to, you know, what are I want to talk about some myths that people may have when it comes to the lending side, right?
I got one right off the top of my head.
There you go.
Yeah.
There you go.
So the biggest one, and these are usually first time home buyers. We touched on it briefly, but it's excellent credit and big down payment. You know, so there's this myth, of course, that people think that you have to come in with a big down payment, or 20%, right? And that's it's wrong. You don't have to do that. There's programs where you can come in and put the minimum, which would be a 3% or 3.5%. Those are programs that are offered for pretty much any first-time home buyer that has the ability to qualify. You can come in and the bank will finance 97% of what you're buying. And so that's a huge plus for someone who may not have 20% or may be in the position to do so. Yeah. So that's one myth right there. You don't have to have a big down payment, and you could still qualify for, good rates. You could still qualify for 30-year programs with fixed rates. You have a lot of benefit, and you don't have to come in with 20%.
That's great. Okay. And then what are some of the costs that come with, what are the two biggest costs that come with a purchase of a home, right?
Yep.
You have the down payment and the second one, which is closing costs, which is a lot of people kind of miss, because
nobody tells you about it.
Yeah, nobody really talks about it, right?
Right.
And like all the content that I see online, I always hear people talk about down payment. Down payment.
Yep.
All you need is X down payment,
Exactly.
but they forget the closing costs, and then it's like people get blindsided. Maybe somebody reaches out and is like, oh, all I need is $10,000 or $5,000 to be able to buy this home.
Exactly.
But then they forget about but then they forget the closing costs, right?
Yep.
So typically, talk a little bit about closing costs. What is it? What does it cover? What is included in there?
Yep. So that's the two major things: down payment, closing costs, right? So down payment is what the lender is going to require from you as the minimum investment towards the purchase. So they basically calculate what the purchase price of the house is and whatever your percentage is. If it's that 3%, that's what you're giving based on the price of the house, and they're financing the rest, right? Now, closing costs are, for the most part, the cost of the transaction. Right. So those are the taxes that you're paying on the property, whether it be in Maryland, it would be the transfer taxes, property taxes. Then you're paying the title services. So you're paying the title company, and then you're paying the lender. So pretty much all of those are costs that you are paying to purchase your home. So that's separate from what the bank is asking you to invest in to be able to buy the house. This is what it's costing you to buy the house. So that's where the big difference is, right?
Okay.
So essentially, yes, you have those two major investments, and some of these things sometimes are prepaid, right? So inspections are things you're paying prior to you buying the house. You're and then you guys may talk about this more too, is the earnest money deposit. So those are things that a buyer has to be ready for prior to settlement to be able to kind of put forth at the very beginning. So inspections, deposits, and these are things that I always like to talk about too at the very beginning when I'm taking the application and kind of going over with them exactly what to expect, from this part on. That's essentially what I like to make sure that they understand, so that way they're not caught off guard. It's like, oh, I didn't know I had to have this, or I didn't know I have to pay for the inspections up front. These are things that it's good to inform the buyer. But for the most part, those are the major two things that are being put forth to buy a house.
Okay. And Carlitos, on that first one, right? And the myth of having a big down payment and having perfect credit and all that. So I get it, right? So no one's saying if you have 20% down, you can afford it. That's great, right? Because at the end of the day, what the whole point of the 20% down, that comes from trying to eliminate mortgage insurance. Correct?
That's correct. Yeah.
That's it. But mortgage insurance sometimes is $100. Sometimes it's $30. Sometimes it's $200. Sometimes it's $300. It depends on what you're buying, right? So my point being is, people have to understand that, yes, that let's say there's an optimal way of doing things, but sometimes you can't do things optimally, right? Sometimes you just have to get it done because it's what you need to do and move forward. Yeah. So my point is that people have to remember that these mortgages are for 30 years, man.
That's correct.
30 years, right? So the difference between you maybe giving 10% and 20% on a payment, maybe $300, $200, $400, whatever it is. But at the end of the day, it's like, hey, I'm going to miss out on owning, and stop paying someone else's rent over $200 a month, $250 a month. You see what I'm saying? And that's like getting down to the nitty gritty, right? Like that's the reason we say come in. Let's speak to the lender. Let's find out the numbers, because you might have been doing on the Zillow calculator or on the Rocket Mortgage, and with 20%, that's like, oh, that's the $1,200 I want to pay a month. That's great, but can you afford $1,450? Yeah, probably. So buy the house now. You see what I'm saying? So that's kind of
Yeah, you're right.
Yeah.
And you just said something that is so commonly referred to is, oh, I saw a house on Zillow or Redfin, and the payment says it's for this.
X, yeah.
But the one thing that Redfin and Zillow, they say it, but it's hard to see, is that to get that payment, you have to put a 20%. So they've already prefixed these calculators within their websites to already factor in a 20% down payment. So sometimes when we're looking at a house with a client, they're already approved and everything, and they're seeing something on Redfin or Zillow, they're being shown a payment that is a 20%, and then I'm coming in and saying, hey, no, this is what it's going to be. And so they're like confused. They're saying, why is your payment so much higher than what's on Zillow? Yeah. And so then I try to show them. I don't ever want to discredit what they're saying, because they come in with a valid point. They're coming in and seeing something which is factual. They're seeing it on Zillow, and Zillow is telling them that the payment that compared to mine is $500 less. And I have to tell them and explain to them that's not the case. We're not comparing apples to apples.
And Zillow's probably basing that on a 800 or above credit score too.
So they already have prefixed certain.
The stats are maxed out. Their calculations are for a ideal perfect.
The perfect buyer.
Perfect buyer
for that house.
Like but 5 stars across the board, you know,
So what I'll do, I'll go in and I'll tell them, okay, hey, do you have a second? Well, let's go into Zillow. Let's take a look, right? So we'll go into Zillow. If they're on their phone, you could do it too. So they'll go on their phone, they go to the Zillow app, and they'll go to the calculator section. And on the calculator section, there's a like a field that you could drop down, and they'll tell them what factors it is that they're
okay.
Right?
So they can like input.
Yeah, they can input, they could customize.
Yeah.
So I tell them, do you see what it shows there? What does it say for down payment? They're saying 20%, and sometimes that 20% is like, if it's a large house, 80,000, 90,000, and I'm like, do you have 90,000 to put down? You know? So and they're like, no, we want to do the minimum. Okay, so let's change that to the minimum, and then we compare that new monthly payment to what we gave, and they're like, oh, okay, that makes more sense. Okay, now they understand that Zillow app or Redfin app is already prefixed with certain data fields.
Yeah. So now that we're there, this is a perfect thing that we're on this topic, right? So, for the people at home, so they can know, right, what does the down payment affect, right? How can somebody, what does somebody that wants a lower monthly mortgage payment, what do they have to do? Is it they just have to put down more down payment? What are the things that they can do to lower that monthly payment?
Yeah, so for the most part, these programs are designed to try to give you the minimum down payment possible. So they've made it to be able to do a 30-year program. So they've stretched it out long enough so that way you're able to afford a monthly payment for 30 years. The biggest component to it, if you're putting more down payment, ideally it's logical. You're putting more, you're financing less, right? So if you're financing less, you're going to decrease your monthly payment, right? So now if you have the ability to do that, by all means, go ahead and do it, because it's going to become more affordable for you.
Right.
And, but if you don't have the means, of course, then you can always go with the option of being able to finance the most possible to be able to afford your home. So the best way to do it, if you have the ability to put more down payment, go ahead and do that to finance little. But if also other ways and techniques that are available and that are out there is that you could always pay points towards buying your rate down.
Yeah.
So those are other ways to
talk a little bit about that. What are points?
Yeah. So a point is a 1% is the equivalent of 1% to your loan amount. Right. So you're paying. So if it's a $400,000 loan, 1 point would be $4,000. Now that point can depending on what your credit score is, the type of program you're using, can be equivalent to maybe a 0.25% lower on your rate to a 0.5% lower on your rate. So it really depends, and that's where you would have to talk to your lender to really find out, what that 1 point would translate to on your monthly. But yes, so you're basically paying additional money or additional closing costs to be able to get a lower rate. So that you have the ability to do to help lessen your monthly payment without having to put more money down. So it's another strategy, another technique to do it.
Can I do both?
You can do both, yeah. So it's really going to depend on the client, their capacity, what they have, saved up to do it, and that's where it helps having a good mortgage professional to kind of strategize, if you're using X amount of dollars to maybe you put 15% down and then that other 5%, you're kind of dispersing it to pay points and things to help lower your rate or even pay off MI, all of those things, MI meaning mortgage insurance, paying off those certain things to be able to afford that house in a lesser monthly payment. There's a lot of different strategies that you can use.
And I feel like that's something that, not a lot of lenders talk about. And also he did mention MI, which is, I feel like, something that we should talk about.
Mortgage insurance?
Yeah, mortgage insurance and MIP. So Alvin, what is MI and what is MIP, and is there a difference between the two?
So yes. So there's mortgage insurance is basically if you're putting less than 20% down on your purchase of a home, you are getting you're having to make a monthly payment on the loan itself to pay like an insurance in other words for the lender. It's insurance for the lender. In case you go into default, forbearance, and things like that. But essentially, if you're able to put 20% down, you don't have to worry about mortgage insurance. You're not having to pay that premium. Now, you mentioned premium. So with a typical conventional loan compared to FHA loan, there is a big difference. So an FHA loan has a built-in upfront mortgage insurance premium that can get financed within the loan. So that's usually a 1.75% of whatever the base loan amount will be, and that gets financed into the total loan. But on top of that, you're making a monthly payment on that. Now, the government recently made a change to that. They lessened the monthly mortgage insurance premium by 30%, which is great because now your monthly mortgage insurance that you're paying on an FHA loan is much less, and it makes it more affordable on the monthly side. With conventional, that really hasn't changed. That's always going to be based on factors of the loan, your loan to value, your credit score. Those are really how conventional loans kind of dictate or determine the MI factor or the mortgage insurance factor. But yes, that's really the big thing. Is if you're putting less than 20% down on a mortgage or on a purchase, then you're going to pay mortgage insurance. Now, that's where I was mentioning that you can kind of buy out those premiums or those monthly amounts by paying these costs up front. That could be determined with your lender. How much is it going to cost you to eliminate the monthly mortgage insurance? So you could do that even if you're putting less than 20%. There is ways to do it, but typically the person that's just going in with the minimum down payment will pay that. With FHA, it's for the life of the loan unless you refinance.
Yeah, I was just going to say that.
Or with conventional, you can always you do it for the first 11 years. It's programmed within the first 11 years of the loan. So that's kind of how the mortgage insurance is determined as well.
Okay.
When I first started, FHA was only 5 years. The first 5 years.
Really?
Yeah.
Okay. Yeah. No. Did they with the MI that you're paying?
Yeah.
Really?
Yeah, with FHA, yeah. I mean, unless I knew it wrong.
Yeah, no.
From what I understood, it was only for the first 5 years of the loan.
Yeah, no. For the most part, FHA is already programmed within the first the 30 years of the loan.
Yeah, it never falls off, right?
It never falls off. So people, the way they kind of get around it, and a lot of that was seen with the most recent through COVID, right? So the rates ended up dropping, so a lot of people refinanced. So because equity ended up building on their home, a lot of people took advantage with the low rates, they refinanced their loans over from an FHA to a conventional. So what benefited them, not only did they have a lower rate now, they were able to drop the mortgage insurance because now they had enough equity. They had at least 20% or more of equity built into the home to not have to pay a mortgage insurance.
Yeah.
So a lot of people benefited, and there's a lot of people that can still benefit because home values are continuously increasing. So that's also a benefit to people that buy now, and then later on in a year they can always refinance.
Yeah, that's one of the things that we talk about a lot, right? Is one of the benefits of buying, right? No matter what the rate is, if you can afford it, right? Because it's in the long run, it's gonna beat out. You owning is gonna beat out you renting.
Yeah,
right.
Yeah.
You know, because when you're renting, we all know you're not getting nothing out of that. It's 100% interest payment. You know, you're not seeing any of that money back.
Yeah.
And in exchange, right, when you decide to make that step into ownership, let's say you buy at this 6.25% interest rate, right, whatever it is right now at the moment, and let's say they come down in 2-3 years from now, right, and you refinance within that time span. Right, correct me if I'm wrong, you would have built up equity, your home would have gone up in value, you would have already have value in your home. And you can do that, you can leverage that, you know, whatever way you want, you know. So in exchange, like let's say you would have just waited those 3 years to buy, you wouldn't have had nothing to show for it, you know, right?
Yeah. And sometimes you can't even get back your security deposit.
Yeah.
You know?
For the rental?
Yeah.
Yeah.
If you're renting.
Yeah, man. And then on shout outs to Matt Escobar, you know, broker at Argent. He always reminds me of this. And this is true because I always forget also.
Yeah.
Bro, there's a tax benefit in owning.
Absolutely.
Yeah.
So remember those $200-$300 we were talking about that, you know, are keeping you from buying this house, $300 a month. At the end of the year, you might get $3,000-$4,000 back.
Yep.
And that's going to cover that $300 difference that you're afraid of. You know what I mean? So that's when you're at that place renting, there's no tax benefit.
There's no tax
right?
benefit.
And the tax benefit comes, correct me if I'm wrong, Alvin, from the interest.
That's correct.
The interest you paid on the mortgage throughout the year. You get that back.
That's correct.
You see what I'm saying? You don't get that back. You don't get that back in the rental. You know what I mean? So, so just to drill that point, folks, if you can't give 20%, that's fine. Find out what you can give.
Yeah.
Find out what that means monthly for you, and if you can afford that monthly, right? Even if you have to stretch it out, hey, you can't go out. You got to sacrifice and save those $300 a month.
Yeah.
You'll get those back at the end of the year.
Yeah.
Yep.
You see what I'm saying?
Yeah.
So you can't look at it like a L. You know what I mean? Owning property is always going to be a big dub.
Yeah, and then talking to a lender is you know, it's a very necessary and very important thing to do because, like, you know, they'll be able to answer, like, you know, they'll be able to answer a lot of questions for you, right? If you're worried about you don't have enough for a down payment, Alvin can see with what programs you qualify for, what programs there is available to
Find
you.
you some money.
If you are a first-time home buyer, there is so many programs, so many assistance that are rendered to first-time home buyers because we all know this country wants to empower first-time homeowners.
Hey, homeownership.
Exactly.
Man.
Exactly.
Yeah.
And you know, one of the reasons I am with Embrace is because they have a great grant program for first-time home buyers. It's through a nonprofit organization called Wider Path Foundation. They offer up to $10,000 for first-time home buyers. And one of the great things that I enjoy about this organization is that they are focused on helping minority families get home ownership, become homeowners, right? So it's great because they provide the ability for them to purchase a home in a more affordable way by covering up to $10,000 in towards down payment and closing costs, and it helps tremendously, especially in this market. You know, at least currently in our climate is where there's a lot of buyers, a lot of competition, right? So it's a little more difficult to be able to request assistance from a seller to help pay for closing costs. This type of program with Embrace is great, you know, because it provides that additional assistance that maybe you might not be able to get from the seller.
Yeah.
You know, so it makes it become more affordable. And again, it's meant for minority families, right? So it's a super tremendous assistance and a help. And you know, it's very good for those individuals.
Yeah, and then we were the deal we have going on right now. You were able to get my clients some help.
Yep, exactly.
Yeah. So it's real. It's legit. It's not it's not a myth. So and the proof is in the pudding. So yeah, another thing that I want to and we can wrap it up on this one is I want to talk about loans, the different types of loans, because the people that I've talked to friends, that are thinking about buying in the near future, and they always ask me about loans. They don't know anything about it. So what are the different types of loans that people should be aware of?
Yep. So there are different type of loans. The most common ones that are out there, or the ones that we offer, let's say. So there's the FHA loan. It's a government loan, the conventional loan, USDA, which is meant for rural areas, for if you want to purchase in a rural area, and VA loans, which is for veterans. So all of these are I would say the most commonly used ones for first-time home buyers and just continuing buyers. These are the ones that are going to be out there for those buyers. There are other specialty loans. For example, people who may be self-employed, they can. It's still a conventional loan product, but it's a lot less. It's a little bit more on the down payment that you would have to put, but it's meant for self-employed people who may not show enough on their taxes, but can provide profit and loss statements that will show what their earnings are for their business. So there are different products that are out there, bank statement loans that require 24 months of your bank statements. And, all those are different products that are out there. And it's going to come down to when we have that one-on-one meeting to kind of help us determine what's the best fit program for them. Now that there is options, yes, there's options for people with all types of situations, right? So if you may have a work permit or a permanent residency or a U.S. citizen, all those people have options. If you're self-employed, if you're on a W-2 salary job, or if you make commission or tip income, all of those have options. So it's really going to come down to when we meet, in person or through the loan application, to help determine what is the best fit or the best option for you. And that's where we kind of use all of the information that we have available to help determine what's the best suited for them.
Yeah, that's good, and that's why it would be very important, for when people meet with a lender like yourself, it's important for them to lay it all on the table. I feel like you're the one of the people that they can be completely honest with about everything that they have going on, because that way you will be able to get an idea of where you can best help them and how you can put everything together to work for their best interest. Correct? Well, fellas, anything that we want to leave on before we wrap it up that you want to say?
When are the rates going to go down now?
Yes. I feel like that's a whole episode on its own.
That's for the next one. Yeah. Sure. We got to talk a little bit more about that.
We didn't even touch about rates, but this was kind of, let's say, an introductory episode, with Alvin. I feel like this was full of very great information for people. I know people are going to love this. Alvin, tell the people where they can find you. What are all your social medias and stuff?
Pero habla español. O solo es el nombre. O solo es el nombre.
Flores no me lo dieron de gusto.
There you go.
So claro, yo hablo español para la gente latina en la comunidad aquí en Maryland, Virginia y Washington. Yo soy un prestamista, si no lo entendieron en inglés, pero tengo experiencia de más de 6 años sirviendo a esta comunidad latina. Hay diferentes programas, opciones para todos ustedes que quizás tengan unas situaciones únicas, ¿verdad? Pero ese es mi trabajo, ayudarles a ustedes, educarlos y prepararlos para una compra de una casa. Por lo tanto, mi nombre es Alvin Flores. Mi número, si los apuntan, es 240-551-8506. También yo les dejo ahí, si ponen en la en el video vamos
Sí,
a poner
te
la
vamos a poner
información.
Ahí te vamos a
Ahí
etiquetar.
vamos a poner mi información también para que si se les olvida.
Yeah.
Así me dicen, pero es que mire, René, que yo acá y es. Y le digo, es que ese es un rompecabezas. Entonces tenemos que llevarlo al que se dedica a resolver rompecabezas. ¿Me entiendes?
Claro.
Al armador.
Yeah.
You know what I mean?
So hay diferentes opciones y lo bueno, como ustedes saben, hablo español, nacido aquí, pero de El Salvador, ¿verdad? Sangre latina tenemos acá.
Yes, sir. Ya lo saben. No, okay. Well, Alvin, it was a pleasure having you.
Yeah, man. Thanks for coming by, buddy.
It won't be the last time for sure.
Awesome.
And anything you want to close on, tell the people, like anybody that's afraid to take that first step into home ownership.
Yeah, so I would say the biggest thing is at least getting an informative meeting. You know, like be able to, because of course people do their own homework. They think that they're educating themselves by doing a lot of the search online and Googling everything, which is great. There's nothing wrong with that. It's better to be an educated buyer than not to be, right?
Right.
But I definitely always suggest speaking with a professional. Speaking with someone who understands the business, understands, everything that's going on now. And one of the things, again, like I mentioned before, is that I like to make it a commitment-free meeting. You know, something that where they don't feel that what they're doing at that moment feels like they're committing to something, right? It's simply for their education to get them prepared, right? So it's just basically an in-person Google session.
There you go.
You know, so now that to me is the most important first step that they would want to take. Find out what you can qualify for, what options are available to you. Do you have options to get assistance for down payment and closing costs? Find out all the basics first, you know, find out that information and then go from there. Then you could do your own homework again, you know, go on Zillow, see what I gave you and kind of compare what that really means to a house that you might find on Zillow.
There you go.
Y si los tienen una buena carne asada, una sopita, podemos
yeah.
llegar hasta la casa. Podemos
That too.
llegar
Yeah, that's right, man.
We do house calls too.
Unos taquitos.
Hey, no, I appreciate you being on, man.
Yeah. It was a pleasure having you, Alvin. And this was another successful episode of the People's Real Estate Podcast. And we will see you guys in the next one.
Catch you in the next one.
For the people.
Pa' la gente.